what are the best passive income strategies?
Okay. Passive income strategies would mean passive debt kind of funds is what I'm assuming. So there is nothing like a best kind of strategy. Obviously, each of them have their own merits. So you will have a lot of offerings, including some products from our own side and even from others in the market, which obviously Holistic can even guide you there. So there, typically you tend to invest into 10-year G6 in India, or try to look at some of the state development loan kind of products, because these are very good kind of products from a credit perspective, because they are owned by the government or guaranteed by the central government, state government. The chances of default, if anything, is very, very low. It's almost zero is what we could say. So you can get a reasonable amount of income or accruals coming in from that. Plus, the fact is you will have various market scenarios spanning out over a longer period of time. So in case the time when you see interest rates actually decline, you could see the price for that particular thing going up in the market. So that benefits also can work. But typically look at long term, it can give you good accruals. For instance, the same thing which I was talking about. Today, a 10-year GSEC is trading at little over 6 in India. A similar 10-year product, say, of the state development loan or the state development or the state government's issuances would possibly fetch you close to 650, 670 kind of levels. So which means it's a good level. You just get into a passive kind of product which invests there and which obviously keeps running down over this period of time as the maturities keep coming down. And over a 10-year period, you will roughly make that kind of returns. So these are some of the options which is available. So these are very simple offerings which is there. So that's something which you can look at.
Sure, Rajesh. One strategy generally I share with my investors for passive income is, especially for retirees, say 70% of their money can be invested in fixed income securities, a combination of FD or monthly income scheme and other, like debt funds. 30% can be invested in index funds. So in the long run, in 6 to 7 years time frame, the index funds, there's a possibility that like it will give you good return, and it may double also. When it doubles, you remove the gain alone and add it to your fixed income corpus. So that way, this becomes a good passive income strategy. It can help you beat inflation also.
Sure. Yes.
So
correct. That's a very good approach actually. So because finally that is the intent, and the aim is to beat inflation from a longer period of time. And also because some of us might be requiring regular income to come from that to meet our requirements. Even that is very important to have a combination like this, because equities always will add that edge to ensure that your overall returns from a longer term perspective is better than inflation, but it carries with its own challenges of volatility from a near term perspective. So that balancing between debt and equity is very important, and I think that 70-30, 80-20 kind of products are very interesting.